In this week's episode, I chat with Option Alpha's Kirk Du Plesses.
It is not about finding the fast track. It's about getting on the track, the right track, the fastest. Ultimately, investing is a mix of personality and risk profile, right? Like, what do you want to do? Like, how much risk are you willing to take? How much activity are you willing to put in? And I don't think it's for everybody, but I think that options trading has to be an aspect that you have to include in your portfolio. People look at the world of options trading and they associate complicated with high returns, which is the wrong association. The association you should be making is simplicity and consistency equals high returns. And the underlying fundamentals are you got to be an option seller and you got to keep your position size small. And that's it, high probability option selling, small positions. And there's a lot of avenues to get there. So where people get tripped up is they think or they over assume that there's one direction. My goal in trading really is to be the guy who's always here the next year, right? I never want to disappear. Keeping the same level of consistency and persistency, day after day, week after week, month after month, and that's hard to do. That's what a disciplined investor trader does. But I want to be that guy, that's there for a long time because that's where the numbers are. The success numbers are really on the further end of the spectrum. So it's the ability to get to that further end.
From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges Podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Greetings, ladies and gentlemen, and this is Houston. Welcome to episode 30 of Trading Edges. And in this episode, we talk options with Option Alpha's Kirk Du Plesses. And having had my own ups and downs trading options, I think one of the most salient points that Kirk drives home early in the show is that it's not about finding the fast track to success. It's about finding the right track the fastest. I'll say that one again because it really hits home. It's not about finding the fast track, it's about finding the right track the fastest. Because I think as traders, many of us have this propensity for new shiny objects, right? Or the shiny object syndrome. And this keeps us in sort of a never-ending loop of chasing the next strategy, the next indicator, the next big stock, and so on and so forth. And all of this misses the real mark, and that's skill development. And the key to skill development, which I'll be covering in a future episode, is this idea of deliberate practice, or creating structure to begin to make some deliberate changes in the way you practice so that you can begin to develop skill. So one of the big takeaways from the show comes from this idea of doing the quote-unquote one thing. This idea is one that I've spoken about in the past in some of my training programs, and it comes from a good book called The One Thing by Gary Keller. And the idea is, what's the one thing you know you should be doing that if you were to do, many other things would just fall into place? So if you were to step out of your trading for a second, and if you were to treat your business like a restaurant, what one thing would you need to be focusing on to improve the business? Oftentimes it helps to reframe trading in that other context. Treat your trading business like a business and not just a series of setups or series of plays. What one thing, again, could you be focusing on that would shift everything else if you would do that one thing exceptionally? The other big takeaway comes from this, from a recently completed backtesting project where Kirk and his team backtested over 21 million option strategies, and he shares some of the key insights they discovered from this testing. And one of the main ideas is around options is to start with some simple building block option strategies that involve simply writing or selling options every month to collect the premium, sort of delta neutral strategies, and just looking for the markets to do the work. Another is a 10-minute a day strategy that Kirk shared in the show that has yielded 22% annualized and compounded growth for the past 15 years. You want to tune in to hear more on the details of that strategy. It was a real pleasure to chat with Kirk, and he's got me inspired to reconsider the role of options trading in my own overall trading strategy. Don't forget to head over to the resource page at the Trading Edge / episode 30 for the show notes and links to everything we talked about on the show. Without further ado, let's start the show. Welcome everyone to episode 30 of Trading Edges. Now on today's podcast, we're going to talk a bit of options. This is kind of the first time we've talked about options on the show. But on the podcast today, we have a trader by the name of Kirk Du Plesses. And Kirk is a trader and founder of a great site called Option Alpha. He's also had some interesting experience around real estate, spent some time in investment banking, as well as being a REIT analyst. So first off, Kirk, welcome to the show.
Thanks for having me on. I appreciate it.
You bet, man. So why don't we start from the beginning with roots in real estate, investment banking, and as a REIT analyst, how did you make the foray into trading?
Well, trading is crazy, and so I just figured I might as well do the most craziest thing I could do, right? I just, my parents were in real estate for a long time in the mortgage business. I mean, I kind of grew up in the business finance world, so for me, it was a really easy, natural transition. I went to school for finance, and as strange as it sounds, I had no clue what I wanted to do after school. And I went to the University of Virginia, which at the time was the top business school you could go to. And so I kind of looked around. I was like, what are all my friends doing? They're all jumping in investment banking in New York. I said, okay, well that sounds like maybe I should do that. So I went to New York and worked for Deutsche Bank for a while in M&A. And when I was up there, I had a rotation in the derivatives trading desk. And so that's where I first really got my introduction into options. I studied it in school and took classes on it, but really seeing major players doing it in a major way. That's where I got my introduction to it. Eventually left New York. My wife told me it was either in New York in investment banking or her. So at the time she was my fiance, and I left that. And
was that a good trade?
That was a great. That's the best trade I've made. And so left that. We moved to DC. I was in the REIT space for a while as a research analyst. I would publish reports. I would meet with CEOs and CFOs and talk about their real estate business. And to me, that at the time was a nice hybrid. Because I loved real estate. I liked that aspect of the business, but I also liked the financial stock market world and that side. And so that was a good experience. And then eventually, while I was home in DC, started trading for myself and started kind of doing some of the things I had learned in New York, and that just has continued to grow. And so I've been trading now for over 8 years. I've had Option Alpha for about 8 years now, and so I guess the rest is history for 8 years.
Nice. And so what made you gravitate to those derivatives? Is you talking specifically about options, or are you talking about other derivative items as well, like futures and other?
Yeah, I've done a little bit of everything, but for me, it's always been options. Yeah. For me, it's a math-based approach. Futures, you could say there's a lot of math behind it, but it's still really directional, like everything else. Forex, still really directional, like everything else. And then people try to overlay the technical analysis aspect of it, and that's cool. I get that. We've back-tested technical analysis out the wazoo, and kind of have our opinions on that. But for me, options is really the only thing that's really ever made sense on a consistent basis, right? And we all go through ebbs and flows of is this the right thing that I'm doing or not? Right. And options have always been that steady rock that I know is pretty consistent and can understand the math. And so for me, that's the most important confidence thing that I have is I have to understand the math behind it, the rationale. There's got to be a reason that we're doing it instead of, some whimsical, just guess or assumption.
Kind of shoot by the hip kind of thing.
Yeah, which I think is what a lot of people do. So
yeah, absolutely, especially when they first get started.
Oh yeah.
So we'll definitely talk more about backtesting, because I know you shared with me before the show about this very interesting backtesting project that you worked on and some of the findings that came out of that. But going back to the beginning of your trading again, so how did you get started, with options trading? Did you just kind of jump, right up to your waist and into it, or did you have a more structured approach to your development? Can you share how you got started?
Totally not. So I say this because if people go and look out my first blog posts, which were ironically enough on Google Blogger, if anybody's been around that long to know what Google Blogger is.
Yeah.
But it was totally random, totally not structured in the beginning. And I think everyone starts like that. I don't think anyone actually starts off with a real concrete, kind of framework. I mean, I constantly say the first week that I was really trading at home by myself, I lost almost 10 grand. And so my wife looked at me and she's like, listen, I know you want to do this trading thing, but she's that's not going to happen. You know what I mean? Right. You better fix it pretty quick. Yeah. And so, I did a lot of the common mistakes that everyone does, early on, or maybe two common mistakes, too big of a position size, fighting against the market, assuming I was right when I would have no idea if I'm going to be right or wrong on direction, not using the right strategy. I mean, you make a list of common mistakes. I probably did them in the first 2-3 weeks of, trading. And I think that's common that people, go through that cycle. And so for me, very shortly after that, I'm like, okay, listen, whatever I think I was doing, I wasn't. And then that's where has been a continuous journey for me to really find out what works, right? And I know there's not one thing that works. So I think people have to get over that right away. There's not one thing that works and then everything else doesn't. There's obviously trade-offs, but there is, now that I can say that now I know, knowing what we do know because of the back testing we've done, there's a consistent framework of what you need to be doing as an options trader. And if you're not doing, those things, you have a really low likelihood of maintaining your success for a long time. I think I don't knock on guys who are really good at, trading in a short period of time, but show me somebody who's really been successful for, 8 years or 10 years or whatever the case is. And I think those people are far and few who are doing a lot of home run type trades, a lot of really, really big positions. I think the time bomb is ticking on them.
Yeah. The folks who are approaching it as gamblers are looking for those home runs as part of their main core strategy, then that's definitely like you said, a ticking time bomb.
Yep.
And it sounds like you've also found that sweet intersection of what works and what fits your personality. So it sounds like, you said you're kind of math oriented, so the options was kind of a natural fit. Would you say that? Yeah,
I think so. I mean, I think ultimately, investing is a mix of personality and risk profile, right? What do you want to do? How much risk are you willing to take? How much activity are you willing to put in? And I don't think it's for everybody, but I think that options trading has to be an aspect that you have to include in your portfolio. I mean, nowadays, I was on, another podcast a while back, and, the guy that I was talking to, he was like, well, you don't really need options. I'm like, no, you actually do. You do need a little bit of options on even the smallest scale. One trade per month can enhance your portfolio. And so for me, I think you just have to then determine how aggressive do you want to be and how much time do you want to allocate to this. I find a lot of people use their job as an excuse. It's not an excuse for being able to actively manage your money. You work 40 hours a week for your money and you won't give it 2 hours a week of management. Come on, give me a break. You can do it, Yeah,
it's an interesting behavior that we work so hard to get our money, and yet for some reason
we just put it aside, and we just we're oh, okay, I worked for it. Now I'm just going to put it in this and blindly trust that it'll be there in 20 years, 10% growth per year. Come on, let's all be adults about this, right? We wouldn't tell our kids to do that, right? So,
and even after the large crash in 2008, 2009, we still do that. People have been hiding their money under mattresses and all kinds of stuff, right? It's so interesting to see that behavior of human beings.
It's like kids. I tell people, I have 2 daughters, right? And I tell people this now as a father of 2 girls, which is the hardest thing on planet Earth to be a father of 2 girls, right? But I tell people this, you would not spend all this time and effort, with these kids and then just whimsically release them to the world. No, it's constant monitoring and tweaking and adjusting and timeouts and praises and, you know what I mean?
Yeah.
And you've got to do that with your investments. I mean, if you don't do that now, you're missing the boat, or you just don't care.
Yeah, well said. So going back to your beginning, so what helped you most in kind of your learning process? Was there something that you kind of picked up in terms of, the kind of the meta aspect of learning or trading that you sort of attached to? You're like, okay, I need to do more of this thing. Was there anything like that you connected with?
I think early on, like I said, I mean, I'm very much a numbers person, so like that aspect of it comes very naturally to me. I mean, early on, you could call it, like mentors, people that I knew at banks, when I was in New York, and even after I left New York, like the relationships that I, developed with people who at the time were very successful, and I think probably still are because I don't keep in touch with as many people as I need to. But I think the reality is that you have to realize that, especially in the options trading game, the wrong storyline is being portrayed, and that's the quick buck, the easy money, the jump in, jump out, like all that stuff. But it's not like it is definitely the story of the tortoise and the hare, and you have to be the tortoise in this business. And it's the people who are around for 5 years, for 10 years, for 15 years that are wildly successful in this. And so my goal in trading really is to be the guy who's always here the next year, right? Like I never want to disappear. And so that's why, like even in the last 8 years, like I've seen guys come and go in this space, and we've always been here. And yet constantly I hear people that are like, oh, your website's awesome. Like you came out of nowhere. I'm like, nope, I've been here grinding for 8 years. Like I've been talking about this crap for 8 years.
Yeah.
But I want to be that guy, that's there for a long time, because that's where the numbers are. Like the success numbers are really on the further end of the spectrum. So it's the ability to get to that further end.
Well said. Yeah, it's such an interesting situation where we have a society that's kind of obsessed with overnight success, yet most overnight successes have been hustling for, like you said, 5, 8, 10 years, right?
Right, yeah. Like I always say, like the best, I don't even know if somebody said it, like I just say it now, so I don't know if it's my quote or whatever, but like it is not about finding the fast track, it's about getting on the track, the right track, the fastest, right? Like,
Nice.
so everyone always
like
is like, I need the fast track. No. You just need to get on the right track, the fastest. It's still going to take 10 years, but you just need to do the right things right away. And that's the problem.
So for you, it sounds like you've you found your track. You put in the deliberate effort and worked to follow that path. What was the hardest part, or what continues to be the hardest part for you?
It's boring. It's really
Nice.
boring.
Yeah.
It's really incredibly boring. Like I think we all have shiny object syndrome. Like, you know what I mean? Like we get the new iPhones come out, we want to get it. Like our phone works, right? Like it still makes calls, right? Like, but it's the shiny object syndrome. And I feel like a lot of people do that. And I mean, look, we've had 33,000 traders come through our community. I've seen a bunch of people come through that, get really engaged and then they lose steam. And for me, the reason I stay so active in the community, because people always ask, like, why do you do this? Why do you stay so active? Is because this is interesting to me versus like trading now to me is so mechanical and systematic. It's just boring. Like if I did this all day by myself, I would come in for an hour or two, make my trades, and then what would I do the rest of the day? Like to me, it's mechanical and boring now. So that's been a really challenging aspect, is keeping the same level of consistency and persistency, day after day, week after week, month after month. And that's hard to do. I mean, that's what a disciplined investor trader does. And that's not easy to do. I mean, it's tough for sure.
That's a very, very good point you raised. I was just thinking about this earlier today, that inspiration is very easy to come by. We all have our New Year's goals, and they come and go. After a while, what tends to lag is the motivation to stay engaged, like you said, right? To show up, be consistent, be disciplined. And that's the hard part.
Yeah, it's like working out. I mean, like I relate it to working out all the time. Like, you got to eat right, you got to run, you got to lift weights, you got to exercise, whatever. And everyone does it for 2 weeks, right in the beginning of the year, because they're motivated. But really, the people who are incredibly healthy and fit and all those things, like they do it day in, day out. They're at the gym every single day, or running, or eating right, or what. That's hard to do, to keep that level of consistency, no doubt. But that's the difference. That's the difference maker.
And so, how do you do it? Do you have a certain framework of processes you follow? Is it more a mindset? Is it just a set of habits that you've got into? Have you thought about what makes you able to show up every single day and perform?
I mean, like, it's not, like, obviously, like, I think like everyone else, like, you make bad decisions and you start breaking your rules every now and again. But for me, like, the membership community that I have at Option Alpha naturally keeps me accountable. So like people always tell me like, like you're doing this, like membership community. And I say like, but listen, you guys just having somebody else on the other end keeps you so stinking accountable. Like, it's crazy, right? So like if I do something out of whack, I'll immediately get 50 comments from people and emails and voicemails, and they'll be like, yo, why, Kirk, why are you doing it like that? And I'm like, you're right. I shouldn't have done it, whatever, like, and it's not like I want it, like I deliberately did that, but it's like, I should have probably looked at that a little bit different, right? Or whatever. Yeah. So I think, look, if I was a trader nowadays, I don't know what you would do, like, to keep yourself accountable, whether you post it on Twitter, have somebody that you contact with regularly, to keep you accountable and like talk through your trades. I mean, whether it's, as hopefully somebody who understands it, but even not, like, just have somebody there to keep you accountable. And I think ultimately that's what people need. People need a trainer. I mean, the best basketball players in the world, the best baseball players in the world, the best golfers, everyone has a trainer, a coach. Like, there's a reason they have that, right? Michael Jordan's coach was not better than him at basketball, but he still had a coach. Like, come on. You know what I mean? I'm not saying that to you, but you know what I'm saying? Like, I get so frustrated with that when people say that. Yeah,
that's a great best practice, but like you said, it's not common practice, which is what we see, what we see so much of. So share with us then, you've kind of shared a bit already. So what is your approach to trading the markets? It's options based. Do you have a particular set of strategies you employ, or how do you use options to trade?
Yeah, so my main focus, like the underlying fundamental, is you've got to be an option seller. And I say that very, very simply because that's where all of the numbers lie. And again, like, I've been doing this for 8 years. So I've been before the tasty trades of the world that had $85 million to push their message in 3 years. Like, I've been talking about this stuff for years and years and years. And it's because the numbers always work out in the favor of an option seller. And then so from at that point, you have to understand a couple things. Like, one, you have no clue where the market's going to go. I mean, like, the reality is, like, you can either spend your life trying to pick and choose the couple little entry points of like where the market's going to go, or just really throw up your hands and accept the fact that the markets are pretty random, pretty efficient, more efficient than not, more random than not. Not saying that they're totally random, totally efficient, because we all know that's not totally the case, but they're more efficient than not. They're more random than not. So stop trying to worry about like where the markets are going to go. Just trade everything as neutral as possible. Be an option seller. Keep your risk size down. Like, don't overload. Don't be a rodeo cowboy. You don't need to trade 50% and be a hot shot. Like, play the small numbers game, play the math game long term. So my whole strategy is built around those like fundamentals. And so ultimately the strategy that we use may just like differ by security, right? If we're trading Google or Apple or Tesla, those are a little bit higher price securities. Okay, so maybe we trade iron condors versus strangles and straddles, right? Maybe we do a credit spread here that's bullish. Maybe we do a credit spread there that's bullish or bearish, so that we have a little bit of diversity. So the actual strategies themselves may differ a little bit, just and even based on your own like preferences or account, if you're an IRA or not IRA. But I think the fundamentals have to be the same. You got to sell options. You got to do it small, and you got to do it neutral, and you just keep having to play the probabilities over time.
Yeah, and so you're not trying to be too risky, selling stuff kind of naked, but simply collecting small amounts of premium, kind of being covered at the same time, and just kind of risking small. It's kind of the message there.
I mean, like, ultimately, just to clarify, I actually like selling things, a lot of things naked. Okay. I think naked selling is not I think it gets a really bad rap. When we back tested strategies that were naked selling versus non-naked selling, the naked selling strategies always outperformed. I mean, like on almost every metric except return on capital, because the return on capital is skewed because in a defined risk trade, you've got defined risk, right? But on every other metric, it outperforms. It actually outperforms with least drawdowns. So like when you actually backtest a naked strategy, which everyone assumes, oh my God, naked strategy, huge loss. Not really. Like actually, it actually ends up having a lower drawdown than some of the other risk defined strategies like over time. So that like concept, I think, is actually kind of misconstrued in the market. But at the same time, I think there's just times where if you sell, like I just was going to sell some strangles in S&P today, and I was going to do it naked, but then I was looking at it, I was like, okay, I'm going to collect $200, but I got to put up $6,000 in margin. Like I'd rather just do a really wide iron condor and, pay a little bit of premium out of that money to, do something a little bit more risk defined and not as much margin.
Right. And so how do you decide then which instruments to trade? You threw out a couple equities names as well as the indices. How do you decide which equities to write on or to sell options on?
Yeah, so I mean, I think you have to first like filter out like low liquidity. I think that's got to be like a hopefully an easy like no brainer. But you don't want to trade anything with a lot of low liquidity. So
Sure.
we really just kind of filter out first by, highest liquidity not only in the stock but also in the options. And so people can get that data from like CBOE and the exchanges. I mean, it's not hard to find that.
Yeah.
And it's totally free. From there, I really go off of the highest implied volatility ones first. Although, like having said that, which has like been the model that we've kind of gone off of for a long time, some of the numbers that we get out of our back testing show that it's really, like that's where you can make the most money. Like per trade, your per trade, credit that you get is the highest. Your per trade win rate is the best on high implied volatility trades.
Sure.
But there should be a place in your portfolio for just a consistent and rhythmic selling of options. And so from there, I think you just have to try to be a little bit smart in your strategy as far as which securities and which industries you're in so that you have a little bit of diversification. Not saying that it's going to ever like solve all the issues, because I think the common misconception is like diversity works when the markets are fine, but then when the markets go down, everything is correlated at the end of the day, right? So if the markets are crashing, diversity gets thrown out the window.
Yep.
So you just try to do as best you can in diversifying, what you have, and just keep an eye on, where the markets are and constantly try to, keep yourself balanced.
And so in your decision-making process, do you take into consideration company fundamentals as well as technical stuff, or what's your approach to
Don't
that?
care.
You
Don't care.
Okay.
Yeah, don't care. I mean, like, I would love to say, like, I mean, obviously, if there's like a buyout rumor, I mean,
Sure.
we're gonna like, check that, right? Like,
earnings
make
and that
sure
kind of
like
stuff,
the high
obviously.
things,
Yeah.
like earnings are coming up and stuff like that. But on a general basis, like, I don't care because all of it's priced in, and so as long as the markets are pretty liquid, I mean, we're just playing a long-term numbers game. I mean, I really want to get on like 3,000 to 4,000 trades a year. I mean, like that's my goal every year, is to get on a lot of trades.
Yeah.
And so I just don't have time to do that.
Right. So over the time, the numbers and the odds work out in your favor.
Yep.
Yeah. Okay. Makes sense. And so I guess on average, then, how many trades would you take in a day, in a week, in a month?
As much as possible. As much as possible.
Yeah.
No, I say that just like, and then people like always like lightly laugh at that, which is what I get all the time. But like,
Yeah.
I will take as many trades as possible. I mean, like I said, my goal is to have 3,000 trades a year.
Yeah.
I mean, so it's really like I'm trying to get in at least like 8 contracts a day, right?
Yeah.
So there could be days like this week we really haven't made any trades. I just made a trade like probably 10 minutes before we jumped on the phone here, but like there will also be times where I'm making 15 to 20 trades a day. I think it comes in seasons. It comes in like repetition and seasons.
Yeah.
Where we are graduating to, and where I'm graduating to as a company and as a trader, is to spread that out and just have some level of foundation or minimum amount that I'm constantly entering on a daily basis. So we haven't quite really narrowed that down what we want it to be, and we've got some thoughts on that, but we haven't, there's got to be some sort of like every day we sell 5 strangles or whatever the case is.
Yeah.
There has to be something that we do on a consistent basis, because when we back tested all of these strategies, we found that was actually a pretty good determinant of, success and low volatility in your portfolios, having this continuous stream of income coming in.
Yes, let's get to that. So let's talk about that backtesting project that we talked about before the show. Why don't you share with the audience maybe what it is that you did, and maybe some of the kind of key takeaways that you kind of figured out or found out.
Yeah, so one thing I'd figured out is that we're totally in the wrong business. Like I told you, it's like I really should be in the data and back, like the server and warehouse business, because I paid too much money to those guys this year than can possibly be conceivable. But what we ended up doing is that like my whole model has always been with Option Alpha is that like money that we take in, like the vast majority of it, I mean, like I could probably say 70-80% of it goes right back out to like development in whatever way, shape, or form that ends up being. So we've spent a lot of money that has gone to buying historical options data, which is not cheap. I mean, we're not talking about, stock prices every closing day for 200, days. We're talking about.
You don't get that off of Yahoo.
Yeah, you don't get that off of Yahoo.
Yeah.
You got to go directly to the exchanges. And so that data is cube data. I mean, it's incredibly large. It's incredibly big. And from there, we built out a software and a development system that backtests different strategies. And what we're going to be doing is going to be releasing a version of that software on our website so that people can literally come in and say, hey, I want to test a strangle 10 days out versus 30 days out versus 50 with a 70% chance of success versus a 90, and this profit target versus that stop loss, and whatever variables you want to test, and be able to historically pull up data and back test that kind of like in real time and see what worked and what didn't. And that is something that nobody has done in this industry. And I know why, because it's incredibly expensive.
Yeah.
And it takes a lot of data and a lot of developers, which are also very expensive to do. But it's pretty incredible because we've backtested at this point 21 million different option strategies. So it's pretty conceivable to say that we've pretty much, tested every iteration or possible combination that you could think of out there.
Yeah. And so what were some of the takeaways? What did you kind of figure out or find out that kind of fine-tuned or adjusted the way that perhaps you trade?
So I think, there's a couple of major themes, right? Like, so we were talking earlier, it's like there's never going to be a one size fits all strategy, right? Like we didn't backtest 21 million and we're like, aha, like we knew it, one strategy.
This is the holy grail. Yeah.
This is it, right? Like it's not that.
Yeah.
But what we found is, and we use like heat maps to do this a lot, like because it's a lot easier to like visually see this on a heat map versus looking at numbers. But
Sure.
We use a lot of heat maps to find out like what are the clusters of performance metrics that like really overlap, right? Like, so, does the 30-day and the 40-day, is there a dramatic difference between trading that far out? Like just 10 days, like is there a difference in doing that? And what we generally found is like common threads. And you guys, we can obviously link this up later on when it's live because it's not live right now, it's in beta. But common threads that we have are, definitely that option selling on a consistent basis works out, right? Like, and I say that because I know I'm going to have people like, aha, like it didn't work this time. I get it. Like it's not 100%, but it works out all the time across 200 plus different securities going back sometimes 20 years, sometimes like Facebook, just a couple years, but it's always been a common thread that you got to be an option seller. And then some other things that I think work out that are really good are things like you've got to have loose stops. I mean, like that to me is something that not a lot of people talk about. They talk about tight stops, but what we've definitely found is that it reduces your win rate dramatically. And so it's actually the person who can withstand much more of the swing in the position, the actual individual position, that actually ends up winning out more often than not. So, I mean, like I say a lot, like don't have stops or have them really, really wide.
Yeah.
But ultimately, people who have really tight stop losses end up getting stopped out all the time. So that's a consistent theme. What we talked about earlier, the fact that you have to have like a baseline of continuous selling. That's not something that we've historically done. Like we've, been very much quiet traders during low volatility, and then we ramp up our activity during high volatility. And now I think there's got to be a little bit of give in both. So now we're going to be, pretty consistent and steady during low volatility. We'll still ramp up in high volatility, but we'll already have that baseline established.
Gotcha.
So I think that's got to be a major theme. I guess the end result of that is just you've got to be more active.
Sounds like the takeaway is that you want to be just kind of, you want to be in the market more all the time, right? So always have some positions always on, even though you selectively think it's a low vol period, you still want to have some positions on, and because you never know what's going to happen. You're still going to collect premium.
Yeah, you're going to collect premium. That's really what it is. I mean, of course, like there's definitely, like without a shadow of a doubt, there are like better setups for different periods, right? Like, so like trading the weekly options, there's definitely a completely different setup you want to do there versus 60 days out.
Yeah.
And so all of those, will obviously be on our website, and, people can go there and grab that. And that, but the main threads are you just got to stay active and got to, be in the business.
Yeah, very intriguing. I can't wait for you to put that stuff up there because I'll definitely check that out because I've always been curious. I'm not a big options seller or even options buyer myself, but I've dabbled quite a bit in options, but I'll definitely check it out.
Well, you got like really your start there, right? Like you went to a big seminar about it and all that. So that was your...
I got burnt really badly, so
be honest, that was your first love. It was your first love. It's okay. And it's okay.
I still have some fond memories.
I was going to say, options trading broke up with you. You didn't break up with them.
That is true. It broke my heart.
That's right. Yeah, it's like a bad girlfriend. Yeah.
That's it. So before we get too personal about my story, we'll go back to maybe another kind of a side topic that I think is somewhat related. Where do you find a lot of options traders get tripped up? I know what tripped me up, but what have you found in your kind of community? What trips people up a lot?
People overthink it. I mean, like really, like I said earlier, once you know the numbers, I swear to you, it's no different than knowing that you have to work out, right?
Yeah.
Like being healthy, which is the goal, you have to work out and eat right. Now, there's a million different ways that you can get there. You can do the yoga and Pilates. You can weightlift and sprint. There's a lot of ways to get there, but the underlying fundamentals are that you have to work out and you've got to eat right. And in the options trading space, the goal is wealth or income, however you want to describe it. And the underlying fundamentals are you got to be an option seller and you got to keep your position size small. And that's it. Like high probability option selling, small positions. And there's a lot of avenues to get there. So where people get tripped up is they think or they over assume that there's one direction. Like, I've got to find that one path that gets me there. No, like a bunch of paths are going to lead to the same end results. Just what fits your personality, what fits your account type, like how active do you want to be in trading? And there's a lot of avenues that will generally get you in the right direction. Could there be a couple strategies or techniques that you could use that will, maybe outperform the next set of techniques by 1% or 2%? We're not talking like outperform by 20%. I'm talking like little tweaks. Mm-hmm. And so where people always get tripped up, and this is something like I try as best I can, like every year to continue to publish data on this and do podcasts like this and whatever, because it's just about like mastering the fundamentals and the basics, and you stick with those. Like you can't change those basics. Everything else, more or less, I don't say like doesn't matter, but it's all just tweaking, right? Like it's just getting down the road. Everything else, like the real fundamentals are the key. So don't overthink things. People overthink it all the time.
And because options is such a deep world, there's so many different strategies, there's so many things you can do to adjust positions and so on and so forth. I think it's kind of that shiny bauble syndrome we talked about before already, where it's easy to overthink it because there's so many things you could be thinking about. Is there a way for people is there some sort of good path people can say, you know what, this is how I can start and and make sense of a direction and try to get on that right direction versus just trying a bunch of things and never figuring out what works best for them?
Yeah, so I think you're 100% right. Like, couldn't be more right when you say like people look at the world of options trading and they associate complicated with high returns, right, which is the wrong association. The association you should be making is simplicity and consistency equals high returns.
Nice.
And so they get in the world of options trading. They're like, okay, I got to do like all of these different things. I got to have like this butterfly thing and iron condor thing and all these hedges and delta neutral and all this other. That's not what you should be doing. What you should be doing, and like what you said, I'll try to give people an idea of what you should be doing, just even on a very simple, basic, like month-to-month basis, is just sell a neutral iron condor every single month. Like that is like a simple building block to, like getting you started on this path. Will that be the end all solution? Should you allocate 100% of your account to that iron condor? No, but just sell one neutral iron condor that's risk defined, that forces the market to make a big move, and do that repetitively and consistently over time. And so that's what you need to be doing, is like finding the strategies that fit your model or your framework or whatever it is, and do that over and over again. I'll give you an example. I had a guy on our podcast that's I don't know by the time that this show goes live, whenever it is, that if this show will be out, but there's a member of our community who literally all he does every single day is go in and sell one put credit spread on the S&P 500 and close one put credit spread on the S&P 500. That's it. It takes him 10 minutes. He goes in the morning, he sells one, and he closes one from like 60 days back. Like the last one, it's like first in, first out. Like that's all he does.
Yeah.
And he's done that year after year after year. And he made 22% annualized growth, compounded growth rate of 22% for like 15 years.
Oh, nice.
10 minutes a day. 10 minutes a day, in, out, done, off with his day. And he does real estate as like his full-time job. But that's incredible, right? But that fits his strategy. Like he doesn't care about anything else. He does the bread and butter. He comes in every day and he shoots foul shots. He shoots 3, Like that's what he does.
He's churning butter. He's
churning butter. That's it. Yeah. Every day.
Yeah, I like that strategy a lot. Never even thought about that. That's a fascinating one. Yeah.
Yep.
Very good one. And so just to talk about, as we get close to the end of our time together here, so in terms of your own performance, what do you do to to get the best out of yourself. So, we've talked about health and being in shape and eating well. What do you personally do to get the best out of your, performance day in, day out?
Well, I have 2 girls and I chase them all around the house, right? Like, so if you hear them screaming in the background, like if I take a picture of this all and I put it up on like Facebook and Twitter before, but like my office is like half office, half playroom, right? So like they're home with me all the time. Nice. So they keep me incredibly like, busy. I've got a personal trainer, so I take my health very serious. I'm training to run my first half marathon here in the next like month and a half, which has been really exciting because I hate running. So like,
good luck, best of luck.
It is like, it's been a goal of mine to do something I don't like this year, and that is something I don't like to do, but yet I want to do it. So I think that's got to be it. Like I really try to stay away from reading the news, watching TV. Like I hate anytime that like anybody brings up like CNBC. I hate going into like a bar or like a restaurant and seeing that stuff up there. Like I think it's poisonous to see this like all the time. So I try to keep myself as disconnected as possible from the market. And I don't know about you, but like, and this is something that's like very personal that I say, but like I have started like in the morning, like doing like a slow, like trying to like meditate. Like that's like a goal of mine to like meditate more. And just, it's not even meditation. It's just clearing your mind, like having no thoughts and like being very clear on your path and stuff like that. And if anybody's actually tried to do this, it's incredibly hard to like not think of anything for a minute. It's like your mind wanders. So that's something I've been doing just like on the mental side of things. And believe me, this backtesting stuff has kept me really sharp with numbers because the expenses that are coming in, I have to keep track of.
Nice. Yeah. And just to talk about meditation for a second, I think that's one of the biggest profound activities for me as I do it.
Okay, so you do it. You do a lot of meditation.
Yeah, I spend about probably about 40 minutes a day meditating.
Wow. See, that's impressive because I'm like at 5. Really, I can do 5 good minutes today. Like
I usually do about 20 minutes in the morning and then 25 minutes in the morning and then 15 in the evening.
Wow. That's incredible.
But you're right. Once you find that groove, then things shift a lot.
It does. Like I can definitely tell. Like I've been doing it for a couple of months now. So like if people know, like it's not, you can't get up to 40 minutes right away. Like, how long have you been doing actually? I'm like interviewing
for several years now.
Yeah, right.
But I've started to really incorporate into my trading probably for the past 2 years.
Okay, good. And so that's what I expect. And maybe I'll have you on my podcast talking about this because I think, like I've been doing it for a couple of months now, and like 5 minutes a day to me is like, it feels so good to do 5 minutes a day. And I'm like, man, if I could get to like 10, like I would be so clear on exactly what I want to do and all that. Yeah.
And if you do it even like before you go to bed or before, just as a way to cool down your day, wrap up your day, it's kind of like brushing your teeth, right? Like it's a way for you to clean your mind before you go to bed. It's, you would never think about going to sleep without brushing your teeth. It's become that same way for me now, where I wouldn't imagine sleeping without at least, first clearing my mind.
Wow.
So it's a good practice.
Actually, I should do that more in the evening because I feel like I go to bed with like thought.
That's it. Yeah.
Yep.
And the neat thing is that when once you start meditating for a while, you begin to you recognize people who are not meditating.
You do
really quickly. That person needs to
like,
meditate.
It is, and I don't, not like this needs to be like a meditation podcast, but I think it's really important because you have to be so clear. Like my goal has been like to be so clear on the things that I'm doing. Like one goal, like I'm holding a domino right now. If like this is the craziest thing because like I truly like want to be at the point where like I'm doing one thing at a time, like one major goal, one activity, like totally clear. And it's like that whole domino mentality, just like hit the first domino, Yeah. But I think meditation is like a great way to get there. So that's actually fascinating. I did not know that you did that. So that's actually really cool.
Cool. Yeah. And thanks for sharing your ritual and routine around that. And so what do you do to have fun? So, it sounds like, you have some pretty good routines set up. You have your daughters that are keeping you really busy. When you're not doing things that you don't like that half marathon, what do you do for fun?
well, I still do spend a lot of time with my wife and my family. I mean, like, ultimately, like, I actually really like running our community at Option Alpha. Like, I get a ton of enjoyment out of doing it.
Nice.
People call it workaholic. I don't call it, like, I do not see it as, like, work. Like, I don't ever sit down at the computer and I'm like, God, I've got to answer emails. Like, I don't ever do that. Like, I like doing this. So we do that. We also, spend a lot of time with our cousins and, our family. I mean, where we live now in Pennsylvania, moving from DC was definitely a family shift for us now that we have the 2 girls. And so my wife is one of, like, I'm going to even guess here and say 36, 37 cousins. In this area. I mean, it's like we do a lot with our extended family, which is great. Like, so whether it's going to the zoo or the park or the baseball games or the hockey games or whatever. Like we do a lot of that. Love to ski, love to snowboard, try to get out there as much as possible in the winter. So yeah, we try to do a little bit of everything.
Awesome, man. And so maybe just a couple last questions. So, we talked a lot about options today and some of the resources that you have on your site, but would you recommend any, books that are either options based or options related or not options related? Are there any top books that you tend to share with people or things you like to share with people?
I actually don't. Like the book thing is something I get asked a lot. And I don't think that there are that many great books on options trading right now. Let me preface that by saying there's a lot of books on options pricing and options models and strategies and things like that, but not a lot of good books on like the mechanics behind it, right? And I think that the mechanics are more important than necessarily knowing how to calculate the Black-Scholes model, right? So I won't recommend any of those. I think there's a lot of incredible books on just like being a great business person and being a great entrepreneur in this space. And I think those are the types of books that really people should be reading. So like The One Thing by Gary Keller,
great book.
Pumpkin Plan. Like that's why I hold this domino all the time in my hand on the desk.
Good reminder.
The Pumpkin Plan is a great book. I forget who it's from. It's over my shelf, but I'm tethered to the computer for this podcast. But The Pumpkin Plan is a great book. The One Thing is another great book. I mean, did I say The One Thing already? Yeah. So like those are the ones that I think people should start reading, because you got to treat this like a business. I mean, like too many people like hobby lobby into this place, right? Like let's be honest. Like I'm gonna whimsically do it. Like no, you should think about this like opening up a restaurant. Like it's a 5-year process from the start. Like go into it with that type of mentality. You'll be totally different.
Great message. And so, what would you advise a trader who's already doing well but wants to go from good to great? Let's say they're already consistent, but they really want to take it to the next step. Any advice to that person?
Stop doing all the stuff that you shouldn't be doing.
Nice.
cut the fat. Like let's get down to the meat and potatoes of what you should be doing. Like that you're goofing around and you're doing stuff that you shouldn't be doing. Like I look at Twitter all the time and I'm like, God, like Twitter's a buyout opportunity waiting to happen, right? Like, you know what I mean? Like they're losing money. They've got a great presence. Like they are just waiting for somebody to buy them out.
Yeah.
So would I love to buy some out of the money call options on Twitter? You betcha, right? But like that's not what I should be doing right now. So like to use my own like mentality as an example, my own case study, like that's what you shouldn't be doing. So cut the crap that you shouldn't be doing and double down on everything else that works.
Nice. So let's wrap the things up here where we are. So where can people find out more about you? If they've enjoyed what we've talked about today, where's the best place they can, stay in touch with you, contact you? Where can they go?
So the best place is at optionalpha.com. We've got a huge community there. I guarantee you're not going to get left out. You're going to get supported there, not only by me, but also by other people. And what I really like about our community there is that you've got people in there that, I mean, they don't even know each other from Adam, right? And they are helping each other, answering questions, sending each other files and links and sharing Excels. And that is priceless. So the fact that we've built that up is incredibly remarkable. Everything that we have as far as video content and PDFs and checklists and webinars, totally 100% free. No catch whatsoever. It's all free stuff. I do not want to be the type of person that has 90% of what you need free and then you have to pay for the 10%. So everything that you need to be successful, or what I believe to be successful in this business, is totally 100% free. When you start getting into like the actual particulars and like the, I want to see you trade, Kirk, and I want to join your strategy calls on the weekend. Of course, like that takes more of my time, so that's going to be paid stuff. But we've got everything out there that you can learn for free, and it's a wealth of information that you're missing if you're not a part of it.
Yeah, I love that, and definitely check out Kirk's website, optionalpha.com. Tons of resources, tons of content. Like Kirk said, it goes deep, so definitely check out his site. So Kirk, thank you so much again for your time today. I had a blast, man.
Awesome, man. Thank you.
And folks, as usual, you can find the show notes, all the books that Kirk just mentioned there, all the other resources we talked about by going to the show notes page at thetradingedge.org/episode 30. Thank you for listening to this week's episode. By the way, I send out a weekly newsletter where I share my latest insights, as well as articles, videos, and performance tips and tricks that have caught my attention during the week. So, if you're interested, come over to the blog at thetradingedge.org to sign up for my weekly newsletter.
been listening to the Trading Edges podcast. We've taken this interview and summarized all the big ideas so that you can take action. Just head over to thetradingedge.org/podcast to find the show notes, transcript, resources, and to continue the conversation.